Hello, welcome to Geojit Spotlight. The election of Donald Trump as the 47th President of the United States is likely to create profound consequences for the global economy and stock markets. There are some important factors that makes this landmark election hugely potentially transformational. One, President Trump is not a mainstream politician. He is a maverick and can take very non-conventional, bold decisions. Two, both the Senate and the House of Representatives will be under the control of the Republican Party, facilitating easy decision-making by the President. Three, the possibility of one more term in office normally restrains presidents in office. This does not apply to Trump, who will be completing 2 terms after the present tenure. These 3 factors will create a highly favorable situation in which Trump can take unprecedented and unconventional bold decisions. One factor which the economy and markets like is that during President Trump's first term of office, 2016 to 2020, American economy did well. American stock markets also did well till the outbreak of COVID. And that was a period in which the Indian economy also did well. It was good for the Indian stock markets also. But in the present context, what are the decisions that President Trump might take, and what will be the consequences of those decisions? Mr. Trump has already declared in his campaign that tariff is his favorable word and that he will impose 60% tariff on Chinese imports and 10 to 20% tariff on all other imports to US from other countries. The 60% tariff, if imposed on Chinese products, will push up the prices of the widely consumed Chinese products, and this can trigger inflation. This will land the American Central Bank Fed in a tight spot. The Fed has succeeded in bringing inflation down and has started the rate cutting cycle to facilitate a soft landing of the US economy. If inflation rises, the Fed will have to rethink and even change its monetary policy. This will have negative implications for global economic growth and global stock markets. Another concern is China retaliating to US tariffs and triggering a trade war. This will have negative consequences for international trade and will impact the global economy also. It is important to understand that this will happen only if President Trump walks his talk and imposes 60% tariffs on Chinese imports. Perhaps he might impose a lower percentage of tariffs or do it very gradually so as not to upset the US economic apple cart. From the Indian perspective, Trump's anti-China policy will turn out to be beneficial. Trump is friendly towards India and will be keen to promote India as a countervailing force against China in this region. But it is important to note that Trump has criticized India too as king of tariffs and therefore will not be very accommodative to India when it conflicts with his America First policy. India can gain from China plus one policy being pursued now. China plus one policy is likely to see more traction going forward. After the initial noise surrounding the Trump victory dies down, economic fundamentals will determine the market direction. Trump's tariff policy and the Fed rate cutting cycle are not compatible. We will have to watch how this will pan out. Coming to the Indian market situation now, the elevated valuations in India and the deceleration in earnings growth are major headwinds and challenges which will cap a rally in the market. Investors should understand that safety lies now in fairly valued quality large caps.